My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Nice to be with you, Jim.
The job numbers in both Canada and the U.S. were very positive this week. Has that affected the markets?
Oh, yeah. The Canadian market, actually, it had more of an effect over on the currency market than the equity market. So there's been some other factors here in terms of equities this week, but definitely big numbers. I mean, the best numbers in Canada since 2006, and U.S. ones, you're starting to see better wage numbers, not just the fact that there are more people being employed, but the average wages are moving up, which is good to see. And, you know, when we look forward to next week and the FOMC rate decision that will come down with, you know, the most probable number is a 25% increase by the Fed in terms of the rates. But with the numbers that have been coming out this week in terms of the economy, there's going to be some push towards even as much as a half a point rate increase. So whether that happens next week or it is into the June meeting, it's clearly going to be in the cards as long as the economy stays perking along the way it is right now.
What about gold? It's had a bit of a downturn.
Yeah, gold's given back roughly 50% of the move that it made off that December low. So had an excellent move into the middle of February, but as we noted at that point, the last few days of the breakout there, the mining stocks broke down to the lowest levels in a month. So that was indicative of the type of thing we would see around an interim high. And we then finished off with a pretty good break in through this last week. But by the time we got into Thursday, Friday, what you started to see, even though gold managed to just tweak under $1,200, the mining stocks, the indices there, the GDX, GDXJ, and if you look at any of the royalty stocks such as Franco or Royal Gold, they turned very nicely. So what we're seeing is more reciprocal action than what we saw in the top in February. So a pretty good chance here with a 50% correction in the gold market and the miners looking better that we're putting in an interim low right now. So worst case scenario, I think, would be maybe down at the 1178 to 1180 range in gold. That'd be a 62%, a nice Fibonacci number. But anything below the 1210 was getting into a support area. So wouldn't be at all surprised that you see the precious metals stabilize at this point.
Has the drop in the price of crude been a shock?
Well, it wasn't a shock to us. We were kind of hoping there'd be one little last hurrah through 55 and a bit of a short covering move, but that didn't happen. This week saw a big move up in the inventory numbers on crude oil, and with that, it was enough for it to break the support that we'd seen around $51 since the middle of December. And as we've talked about, the commitment of traders numbers, which gives us a position of the speculative and commercial positions in the futures market, those numbers have been at absolute all-time highs for the last couple of months, and pushed again as of a week ago into even further highs. And with that, what you have, as you start to break the support level, you finally give up that key support at 51. The margin calls start to kick in for the small speculative accounts who are long and playing the trend, and for the larger trend-following systems that are mechanical in orientation, they're looking at moving averages and other oscillators. So like a 50 or 200-day moving average, as those get violated in turn, those systems will go from actually being net long to ending up with short positions. And with the size of the positions we've had on, it should take the better part of 3 or 4 weeks before we really see this unwind. And when we look at previous bear market bottoms, and we've just had our 6th one a year ago, if you come out to the anniversary date, 13 to 15 months after the bottom, it's very, very common, actually in all 6 of these instances now, to see a break like we're having at this point, and they go down, and they take out the most recent significant pullback where the last support was. So when we look at it right now, go back to November, that was the last good pullback in the oil market at 42.20. We would expect that we will see 42.20 or lower by the time we get into the early part of April. So with that, there might be some better bargains out there as far as the oil and gas stocks are concerned.
Ross, thanks a lot for your help.
As always, we quite enjoy it.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Bill Bonner, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Bill Bonner. He's an author, the founder of Agora Incorporated, and writes Bill Bonner's Diary, available for free at bonnerandpartners.com. He's speaking to us from Rancho Santana in Nicaragua. Bill, welcome back to This Week in Money.
Well, thank you. It's a pleasure to be with you.
The stock markets have been enjoying a great time. They call it the Trump effect. Is this something for real, and will the Trump effect eventually die out?
No, it's not real. I mean, they've done a lot of studies of stock markets, and they find that there's no correlation, really no reliable correlation between big news but with some exceptions. When Germany invaded Poland or something like that, a major news story where you could expect the stock market in Poland to fall. But they've done a lot of studying of stock market trends and things, and they find that there's really no reliable or consistent connection between news and what the stock market does.
What some people have dubbed Obamagate and the alleged wiretapping of President Trump, what should we be focusing on as this story unfolds?
Well, I think you probably should be focusing on something else, because I don't think there's much to this. I think we're getting a lot of confusion, chaos, and distraction in the news, but I don't think it amounts to much. I mean, suppose if there were some sort of tap, had been some sort of tap, which is quite possible, because we were hearing rumors during the campaign that the Trump team or Trump himself had business connections or some other kind of connections, foreign policy connections with Russia. And so it wouldn't be too strange for the administration, with all their thousands and thousands of spooks and all those billions and billions of dollars they spend monitoring conversations, it would not be at all surprising for them to monitor the conversation of somebody suspected, or at least rumored, to have some sort of connection. So I don't think that's a story. I think you should expect that something like that is happening all the time. And it's really a political event here, but it's not quite clear or if it has any consequence at all in the real world. I mean, it would take some explosive bit of news, something that we hadn't thought of, or something that would be very unusual, such as a tape recording between Putin and Trump's, setting up some sort of conspiracy. Otherwise, it's just a typical political hacking around and journalists looking for a story.
The Miami Herald claims after a 3.5-month investigation that Donald Trump has done business with some very shady characters connected to the Iranian Revolutionary Guard. That's against U.S. law. Is this going to be something that could hit the president?
Well, I don't know that specific story, but that Donald Trump has done business with very shady characters is well known. That's his whole business empire is a business of doing business with people in very in difficult or interesting circumstances. Even in New York, I mean, you can't build major buildings in New York without coming into contact with various sorts of people, mafia and so on. And so that would, again, and he's doing it in China. The news just came out today that he'd been granted various business licenses to set up shop in China for various things. No one doing business on the scale that he's doing it could avoid doing it with some shady characters, because that's what's out there. Now, this Iranian thing I don't know anything about, and it wouldn't surprise me terribly if he didn't know anything about it. Because here's a guy who's running a business empire. He has something like 2,500 lawsuits going in the last 20 years. So here's a guy who has a loose grip on the details of his business. A lot of people selling his name for various things. It wouldn't be at all surprising if he were not aware of it, or that there's nothing to it anyway.
The CIA and WikiLeaks, is this going to be the end of the surveillance society?
Oh, that's certainly an easy question. The answer is no. We are in a surveillance society leading to a kind of police state, and I don't see any doubt about that. That what's happening is the technology combined with the fundamental trend of the United States, which is away from being a modest republic, away from being a country run elected representatives, and towards what really is a classic empire model. Nothing wrong with it, and sometimes it can be good, but when you do that, you concentrate more and more power in the executive, and the executive then uses that power. Right now, we're seeing a very funny kind of scene where these people who put in place the surveillance state, who put in place all these controls, all these regulations, rules, and the concentration of power, it's really rather remarkable the way that the executive branch and all those bureaucrats and cronies and apparatchiks in Washington and throughout the country, now they run things partly because so much power has been ceded to them by Congress. Congress is supposed to be writing laws, but Congress can't write laws. They're too complex, so they pass the law writing power to their own staff, and the staff then defers to the whole complex of apparatchiks in Washington who all work together, and they usually survive any change of administration. These people develop the laws, and you saw what happened when they passed Obamacare. People in Congress didn't even read it. Even the sponsors didn't read it. It was too much in it. So we're seeing already the authority, the real power has passed away from Congress, out of our elected representatives' hands, and into the hands of a rather permanent government made up of people who either are elected, people appointed, people who have been in Washington for a long time, lobbyists, representatives of the major industries, most particularly the industry of security, which builds prisons and builds fighter jets and so on, and the Wall Street industry. So that's happened, and that's not going to stop. It doesn't matter who's elected. It doesn't matter what anybody thinks. It's just one of these processes of history. When people get more and more power, they use more and more power, and now they have the power to use it thanks largely to this surveillance state that's been in place. So what's happened, interestingly enough, the people who put this in place are now very annoyed, freaking out, appalled, running for cover, because now they find all this power that they put in place now in the hands of Donald Trump, whom they fear and loathe.
Should we have high expectations that the Trump administration's goal is to actually drain the swamp?
Oh, no, I would say there's no chance of that happening. There's very little chance that they would even think of doing it. I mean, I think Donald Trump is a great showman. He's a great person who understands more about the emotional reaction of the public than probably any politician has in many, many years. But there's no reason at all to think that he would want to do the hard work, stake his career, stake his own future on doing something which is probably impossible to do anyway. I mean, he's not going to drain the swamp, because the people who control the sluice gates, who control the valves and everything, they are the swamp. You know, they run it. And a president can only do a little. He can't do a lot. He can make appointments here and there. He's already appointed people to his core team. He's got like 5 Goldman Sachs people in the core financial team. Now, they're not going to change the swamp in any appreciable way, because they are the main beneficiaries of the swamp. They're the ones who benefit from the financial system that's been put in place that rewards basically the financial industry, and most particularly Goldman Sachs. So there's no change coming there. And then he's put all these generals in place. Now, the generals too, that's the other big pole of the deep state, the other big pole, the other big swamp, which is in Northern Virginia, where all these people tend to hang out and where they have their businesses. Those guys, you know, they're totally bought into the military industrial security complex, and they're not going to have any interest whatever in draining it. It would take a remarkable person with remarkable strength and remarkable brain to be able to even think about draining the swamp. The swamp is not going to drain itself, and you would have to have a huge amount, an immense amount of political capital to be able to get in there and make the kind of decisions that you would have to make to drain it. So that's not going to happen. I mean, it's just not going to happen. There's no way.
What do you see ahead for a Trump-led America and a Trump-influenced world?
Well, what I think is happening already, and I kind of withheld judgment on it for a long time, because it wasn't clear until he was really in office and had a chance to present his budget, things like that, make his appointments. It wasn't clear, because some of the things he said were very encouraging and some were not. So I wasn't sure what he was saying to get elected and what he was saying that he really believed, or whether the two things were mutually exclusive. And now we see he's been in there long enough. He's made enough appointments. He's pronounced himself proud of the Republican Obamacare replacement plan, for example, and he's proposed more spending for the military. So it's pretty clear that what we are going to get, whether we like it or not, is more of the same programs and agenda that we had under the last administration, starting with the Clinton administration. You could go back even further, but from Clinton to Bush to Obama, there was not much real change at all in the budgets, in the actions. We were still romping around wherever we could. Started mostly with Bush, but since then it's gone on and continued through Obama. So I don't expect any real change in any of the things that matter most. I mean, some things matter a lot to people, certain people. If the EPA does things that a lot of people don't like. The SEC does things that a lot of people don't like. But in terms of the overall picture and the things that affect average Americans, I think there will be very, very little change.
We'll have more with Bill Bonner next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Bill Bonner. Bill, you're an author. You do have a new book out, don't you?
No, I had one a couple of years ago called Armageddon, and I haven't done one since. In fact, I said I was never going to do another one. They're very hard to do, take a lot out of you, and I've done 5 of them. I thought that was enough. I thought I'd said everything I needed to say. And then I got a new idea, so I'm starting on a new one.
Bill, is Bitcoin just for believers, or is it an actual new era currency?
Well, it looks like a new era to me, but I'm not that much of a believer simply because I don't understand it. We have a couple thousand years of experience with gold. Bitcoin works like gold. It's a limited currency. It's it's real cash that you can use. But if the electrical system goes down or somebody hacks the system, I just don't know. I think millennials, people who are a lot younger than I am, have more faith in it than I do. I mean, theoretically, it's perfectly good currency and far better than the U.S. dollar as a currency. And theoretically, it or something like it should replace the paper currencies we have today. But since, I just don't have that much faith in technology, I don't have faith in it. I'd rather have gold buried in the dirt somewhere.
The U.S. dollar put in an outside reversal month to the downside in January. What do you see ahead for the U.S. dollar and other currencies?
Well, I really don't know. I don't pay attention to the currencies. And in fact, I don't advise it. Currencies are terribly unpredictable. And, like time goes by and you're long and they're short and one thing and another happens. And there's just, you can analyze a stock. You can analyze an economy. You can do a lot of things, but you can't really analyze currencies very well. It's a different game for different people, to me, and those people are speculators, not investors.
Are the fundamentals lining up for gold and silver?
Oh, well, they love chaos, and I think chaos is coming. So again, by the way, that's another thing about gold and silver. I don't know. The silver puzzles me, so I don't fool with silver. As for gold, I depend on and count it gold as fundamental money, real money, and by that it's something that represents real time, real resources, real effort, real production. Always has, and probably will for a while longer. I don't know, but. When you ask how are things shaping up for them, well, real money is never going to go away, and it tends to be more important to everybody when the other kind of money, the fake money, doesn't work so well. So right now, if we go into this deflationary crisis, which I do expect, this fake money will become more valuable. People owe a lot of it. They owe trillions. Worldwide, they owe $220 trillion worth of debt. And what portion of that is dollar debt, I don't know exactly, but I think it's about half. So that's a lot of dollars people have to come up with to make good on their debt. So in the short run, we should see dollars becoming more valuable as people need more of them. But in the long run, dollar is just a piece of paper. In the long run, the authorities will find a way to depreciate it. And they won't find a way to depreciate gold. So in the short run, the dollar will probably go up. Gold will probably go down. In the long run, it'll probably be the opposite.
Jim Dines is predicting the price of silver will surpass the price of gold. Could that happen?
Well, I saw that, and again, I don't know enough about silver and how it works. Silver, gold is money. So if you're thinking like an economist, you can have an idea about what gold is and how it works and what it might do. But silver, it requires a different level of analysis because silver also has practical uses in the real economy, and those have to be factored into it. So you have that, and you have also the potential monetary use of it. And for me, that's just too complicated, so I don't know.
China's banking system has the largest amount of assets in the world of banking. Is that a concern?
Well, it certainly should be. I mean, the whole world economy, all of our asset prices here in the U.S. and everywhere else depend on a couple things. They depend on the fact that the U.S. stock market is high. When the stock market crashes here, the whole world system crashes. They depend on inflation. If inflation goes up in dollar terms, the whole system's going to fall apart because there's so much debt out there, and debt tends to go down when inflation goes up. And it depends on the Chinese economy. Now that sounds a bit odd, but the Chinese economy has been such a big portion of the whole world economy. Even while the U.S. was growing at 1% and Europe was growing at 2% or 1%, And the Chinese still been growing at 6%, and they're still buying steel, still buying ore anyway, still buying fuel, still buying all the commodities that many nations in the world sell, including the U.S. So I suspect that if China runs into a real problem, all the rest of the world is in trouble too. And China has a lot of debt, and far too much. It's a big debt bubble waiting to happen. Eventually it'll blow up too. I suspect all these blow-ups are going to happen at the same time, but I don't know which one happens first. China could blow up, and that could bring down the world economy and the world's market, or the U.S. market could crash, and that could bring down China and everything. So one way or another, the debt buildup in China is bad news, and how it will sort itself out or when, nobody knows.
The Bank of International Settlements says Canada is showing early signs of a financial crisis. Should the Bank of International Settlements be believed?
Well, they have had a good record, actually. They were the only ones to, as I recall, the only ones on top of the mortgage financial crisis in America in 2006, 2007. And so, yeah, I think that that's true. I mean, Canada and the U.S. Have different kind of programs in place, but fundamentally they're both very, very indebted countries, and I would pay attention to that.
I saw a study that said at the government's current rate of spending, even if they stopped, the Trudeau government with its policies will take 100 years to get back to a balanced budget.
Well, I don't think that will happen because things will blow up long before that, and I think all governments, most governments in the world, will get back to balanced budgets a lot sooner than they think, but they won't get back the way they want. They'll get back because they don't have any choice. And at a certain point, when the you-know-what hits the you-know-what, then people are going to stop lending money to governments. Right now, you can lend to Japan or Switzerland, and you get, and the people are so eager to lend to these governments that they do so even at a negative interest rate. So that to me is crazy, but eventually they're not going to want to lend at all. And some governments have been through this, like our Argentina, a lot of the South American countries. You know, they just did such a job of mismanaging their economies and their government finances, and nobody would lend to them. And they ran balanced budgets just because they had to. You know, they hadn't had any choice about it. So eventually, I think we'll get there for all of these governments, including Canada.
Trump is focusing on reducing taxes, regulations, and creating jobs. Can Canada compete with a tax and spend Trudeau government?
Well, and that's a complex question because Trump. Those things are not going to happen as expected. You can't, if you're going to create jobs, you got to spend money. But if you don't have any money, or you're not really creating jobs, you're just moving jobs from one place to another by moving money from one place to another. A lot of these things are phony ideas. And so, yes, I mean, what happens is it tends to look like something's happening when you get a boom created by credit. And this is a phenomenon well known. So it's quite possible that a boom could happen based on more credit, and it looks for all the world as though you're doing everything right, but doesn't mean it's true. So I don't know. There's a lot in that question that I can't deal with.
Some studies have indicated up to half of the jobs of today could be replaced by automation within 10 years. Where will the jobs of the future be?
Well, that has become a very popular thought, and I've noticed that very popular public intellectual, whose name I think is Harari. He has a book out now claiming that we will all no longer need to work. And I have this friend, Jeff Brown, who's a tech analyst, and he too says that in a few years, so much of the world's work will be automated, done by artificial intelligence and robots and so on, that the idea of work will totally change, that people won't have to do it. Now, I don't believe any of this, by the way. I just don't think it works that way. What really happens is you get a robot and the thing doesn't quite work, so you got to call a technician. And then the technician comes out, and he comes out in his truck that's driven by some kind of artificial intelligence. It runs into another truck, and then you have to send it to the shop to get it fixed. I mean, things just don't work that well. Look at the highways built in America. That was a big technological breakthrough. Highways all over California. Well, the average speed has gone down, and so it's just by putting in technology doesn't mean that all of a sudden people don't need things, want things. Doesn't mean things work properly. Not at all. We have, and since the internet revolution has happened, by the way, GDP growth rates have gone down. And it's not because now we're so much more productive. No, productivity's actually gone down. So first, we have no evidence whatsoever that all this technology is really going to increase productivity so much that we don't have to work and that people won't have jobs. Not at all. In second place, we have lots of experience with this because this is what's been happening for the last 1,000 years. New technology replaces people, replaces muscle power with some sort of machine power. And then the muscle goes on to do something else because there's an infinite variety of things that need to be done. And there's if it's a problem at all, it's because government makes it a problem by regulating it in a way that creates a situation where people can't get jobs. And that's what happens with minimum wages and a lot of the licensing and regulatory issues. It's not a real problem for a real economy. In a real economy where people are free to do what they want, they always have work. They always have as much work as they want because people are free to buy it and sell it at whatever the real rate is.
Can a cashless society be avoided? I'm just thinking of India where they've openly declared war on cash and gold. Is that going to happen around the world?
Well, I think it's certainly headed that way. That's what the governments are aiming for. In Europe especially, there are a lot of measures trying to get people to stop using cash and limiting the availability of cash and lowering the value of the bills that you can get, trying to make it inconvenient. Here in America, if you carry cash, they immediately think you're committing some kind of a crime, and if the police stop you and you have cash, they seize it. They think, well, what are you doing with all that cash? You must be doing something wrong. You know, the civil forfeitures are a nasty business. But, no, I think the war on cash is a real phenomenon, and it's not going to stop because the people who benefit from it will not want it to stop. In the financial industry, they'd much prefer to have your money in their banks and their investment firms and to collect a little fee on it. And the government, too, would much prefer to have your money somewhere where they can keep an eye on it and take taxes out of it. If they get in trouble, they can do what the government of Cyprus did. They just took half of it. They took any account over $100,000. The government just took half of it. So it's an amazing world we live in, but it's not going to get any easier. And I think one of the things that's going to make it harder is the fact that cash is going to be harder to get, harder to hold, and we'll be fighting with governments for the foreseeable future. It could be 20 years. In which we try to hold on to cash. You know, cash was a great innovation that happened a couple thousand years ago, and well, as soon as you had cash, then you could do business with people all over the world. You didn't have to know who they were, whether they were solvent. You didn't have to know anything. All you could just give them money, and they give you something. And that facilitated what we know today as a modern economy. And now the governments want to stop that so they can control all the transactions. And I have to tell you about something else that's very, very chilling. The government of China is always ahead on things like this, and they've come up with this thing they call the citizen score. So the idea of it is that they will keep track of everything you do in your life, and that they will give you a score as a citizen. You know, did you write a letter to the editor of the paper in which you had the wrong views, or did you did you vote? Did you do whatever it was? And depending upon that score will determine your access to money. So that if you wanted to get a mortgage on your house, you know, you would have your credit score and you'd also have your citizen score. So once all the money is in the hands of the banks, which are fundamentally just like public utilities now, and the government has all the surveillance data on you so they can give you a citizen score. You know, it could be determined by which website you go to. I don't know. But then you are really in the grip of a different kind of society, and that is that coming? I don't know, but that is certainly something that worries me from time to time.
Are vacant homes and housing bubbles an epidemic around the world caused by people wanting to get money out of mainland China? And how will that bubble end?
Well, I think that's more of a problem for Vancouver. We don't have that problem in Baltimore. In Baltimore, we have a different problem where the homes are vacant because people have moved out because they couldn't stand the crime. So there are a lot of different problems, but that particular problem is a problem for Vancouver and for London and a few other cities. By the way, it's not a problem in Paris either, because in Paris the taxes are such that people with money in China don't want to go there. So it's a particular problem, and that will end, I think, by when the next crash comes. These things will sell off. People will need money. They'll need to repatriate money, and they won't. Those apartments that they keep in Soho and Chelsea and so on that are empty most of the time will not be so valuable.
Has political division inside countries around the world been increasing, and what do you see ahead?
Well, political division, I don't know. It's just a different kind of division. Used to be right versus left kind of thing, and now it's more like insider versus outsider, or at least on the surface. You don't really know what is going on, but those divisions seem to be increasing. But this is headline news. I mean, I'm not sure that this really makes any difference. You know, in France, for example, Marine Le Pen has been on the ballot. Her father was on the ballot. They've been on the ballot for like 30 years. And now people are talking about it again because of more of an upswell of anti-mainstream candidates, and she is anti-mainstream. So there's something changing. I think they call it the populist revolution. I'm not sure that it's populist. I'm not sure that it's a really big change. I really don't know what to make of that, but I suspect there's less to it than meets the eye, except in the sense that the traditional parties have lost their way. You know, they've been so tainted by collusion with the elite, with the deep state, with the establishment, that Donald Trump was able to come out of nowhere, a very, very imperfect candidate in many, many ways. He was still able to come out of nowhere, laughed at first. People didn't take him seriously. Nobody thought he would win. I don't even think he thought he would win. I think he was just boosting his brand, and then he realized that this was going his way. But that's because the parties did such a bad job, especially the Democratic Party, of staying in touch with their real voter.
What do you see ahead for the Middle East and the price of oil?
I don't really think about that very much. I don't know if I have any views that would be helpful to your readers. From what I can tell, the Trump administration is eager to engage itself even more in these wars in the Mideast, and those are always dangerous and always could have consequences for the price of oil. But anything I say would just pure guesswork.
Is Africa the next place destined for growth?
Hard to say. I think really that South America is a better bet. I just say that culturally. I know South America better, and things go in cycles. And the cycle in South America was that they'd had all these banana republics for years and years. Terrible governments, still have some terrible governments, but mostly they've changed, and they've learned their lesson. You know, if I listen to that guy Macri in Argentina, and then listen to Trump, I think, wow, Macri is much more on the ball than Trump. Macri understands economics, he understands politics, he understands government, he understands much more. So, and I think that's a phenomenon that you find throughout much of Latin America, where they've made very many mistakes over many years, but they do seem to be getting themselves together. And I know the Chinese are in Latin America and in South America, coming in more and more, because these governments also feel, not just the governments, but the people feel largely betrayed by the Americans, as Trump calling the Mexicans rapists and murderers, and the bad hombres. that kind of stuff has not gone over well south of the Rio Grande. And so these people in South America, their economies generally are coming up. They're very productive. Argentina is one of the world's largest food producers. Brazil is a booming economy in lots of ways, lots of problems. But along come the Chinese and say, we'll be your trading partners, and we won't talk trash about you. So I have a feeling that there'll be many more ties to Asia, and that we'll see, just grosso modo, I would expect to see the South American economies to do better than expected, the U.S. to do worse than expected, the term banana republic to move sort of north of the Rio Grande, where, for the next few years, but who knows?
Canadian business is very worried about border taxes and are looking for sources for materials outside of the U.S. Is that going to be a problem for the American economy?
Well, I think it could be. I mean, there's no doubt that border taxes are a bad idea. I mean, anything that impedes trade is going to slow down GDP growth and make people poorer. It may have political benefits here or there, depending upon who you're trying to privilege and who you're trying to punish. But no doubt that it's going to have mostly negative consequences for most people. Higher prices in the U.S. and lower production in foreign countries.
Are you bullish on any particular commodities going forward?
No, I'm not bullish on any particular commodity. I'm a what do you call that? Deep value kind of guy. So what I do is just look around and see, when something is really cheap, I like it. When it's really expensive, I don't like it. So looking around the world, what's really cheap? Well, not much. Real estate generally is overpriced. Most stock markets are overpriced. The bond market is crazily overpriced. Tech is overpriced. There are a couple of little things, Greek stocks, Russian stocks, a few other things like that. But right now, it's hard to find something that seems really cheap. So for deep value investors like me, this is a time to be sitting on large piles of gold and cash and probably not too much else.
A lot of people predicted the demise of the British economy with the Brexit vote, yet the very latest study says the UK can expect to see 2% growth in its economy this year instead of the projected 1.4%. Is Brexit been a good deal?
Well, it depends. I mean, I like Brexit. I like any thing that breaks up political authority, and because ultimately it's people who are free to trade with one another and do what they want to do with one another that make for not only a more prosperous society, but a freer society. And so what was happening in England was that a lot of the rules and regulations were coming from Brussels, and they didn't need more rules and regulations because they had plenty of them in England already. So from that standpoint, that very limited standpoint, I thought that was a good idea. And now since they've broken out of it, they find also that they're worried about, who will we trade with if we're not part of Europe? But in fact, I think all they've been able to say is, well, we'll trade with anybody. We don't care. And that, of course, is good news for everybody outside of Britain as well as everybody in. So I would like to see other countries do a kind of Brexit. I like the U.S. to do a Brexit or whatever, Amerexit, where we say, we're not going to do these stupid trade deals like NAFTA and the Pacific trade deal. We're just going to say, we'll just trade with everybody, free trade. That's the way to make a more prosperous country.
Bill, how can people find out more about Bill Bonner's diary?
Well, Bill Bonner's diary is on the internet. Just look up Bill Bonner or Bill Bonner's diary or Bonner and Partners, and you'll find us. We've been around for a long time. I have been writing this diary in one form or another since 1998, and so we hope of course, we like readers, so we hope that your listeners will sign up.
Bill, thanks a lot for being on This Week in Money.
Well, thank you. Good to talk to you.
My guest has been Bill Bonner, an author, the founder of Agora Incorporated. He writes Bill Bonner's diary, available on the website bonnerandpartners.com. He was speaking to us from Nicaragua. Coming up, Michael Fox, next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Michael Fox. He's the publisher of the Prospector Resource Investment News. You can find it online at theprospectornews.com. Welcome to This Week in Money, Michael.
Thanks for having me, Jim.
You've just returned from the Prospector Developers Association Conference in Toronto. A lot of people just call it PDAC. How many people were there this year, and what was the general mood?
There was a published total of a little over 24,000 attendees this year, and those would be legitimate numbers from what I could tell on the floor. The show itself was way busier than it was last year, and the mood was far more upbeat. I could have conversations with people where they were discussing the projects and the work they were going to do this year, as opposed to last year where they were just simply trying to figure out how they were going to get through the year.
What areas seemed to be the hottest?
Precious metals, gold, silver.
Was there a change in the mood there because of the Donald Trump government in the States?
A little bit. That's going to affect the precious metals in a positive way. But there's other things at play. Uranium hit a bottom in December, and uranium prices have been moving upwards steadily since there. So there was big interest in the uranium markets, as well as the energy metals markets, things like lithium, cobalt, and areas of that has to do with the Tesla effect and the big giga plant that's been under construction in Nevada. You're also seeing zinc and copper prices slowly start to move up in anticipation of some of the infrastructure programs that are, being proposed in the United States. So all these things have left the industry with a much more positive outlook going forward into the future.
Any concern expressed about the low rollout of the infrastructure improvements planned for Canada? I haven't seen any major projects start yet, although the government says they're in the works.
That really wasn't much of a topic of conversation. It was interesting to note. We actually got the Federal Minister of Mines and Resources attended this year. If he was there last year, I certainly didn't see him. And normally we get government officials do a big presser on the Sunday evening in front of everybody. And last year there was a couple of members of the Liberal government there, but they weren't particularly visible, and they certainly didn't give any speeches. This year, the Minister of Natural Resources came forward and reemphasized the federal government's commitment to the industry.
It's nice to know, I guess, that a government finally is recognizing how important mining is.
Definitely. We've been a resource-driven economy in Canada for, decades, and those are where a lot of good high-paying jobs reside, so the government should be paying attention to that.
So zinc and copper seem to be the hot new prospects for us, are they?
Definitely. The interesting thing with zinc is that it's a possibility as for a double play. Most cobalt is actually a byproduct of zinc production, and cobalt is being used quite extensively in the new battery technology. So, people that are working in zinc are also going to have some opportunities within the cobalt markets as well.
Diamond mining, is it still a big idea?
There were some diamond miners there, but it doesn't have quite the sparkle, pardon the pun, as it once did.
Where are the major plays on the lithium front?
On the lithium front, there's quite a number of lithium developers working in the Nevada area. There's quite a bit of lithium there, and it's close proximity to the Tesla Giga plant. There's an interesting lithium play that's happening in Argentina right now. I believe it's Ultra Lithium was the player in that. But there's lots of it out there.
With uranium getting a little more chatter, whereabouts are they going to be looking for more of that?
Well, the interesting thing with the uranium markets is there's nothing new that is going to be close to coming onto line. So the areas of exploration that are huge right now is the United States would like to become self-sufficient in uranium. So you've got plays in around the Wyoming, Utah, and Arizona quadrant of the country where there's a fair amount of uranium at play there. Energy Fuels is working in that area. Here in Canada, the area to still be watching out is the Athabasca region in northern Saskatchewan, where people like Denison and Sky Harbor Resources are working.
Has the industry been held back because BC has a moratorium on uranium exploration and development?
Not really. The thing that's held the uranium markets back is the fact that uranium prices were so cheap. They were grotesquely low to the point where a lot of producers would be producing at a loss. And a lot of those miners have, such as Comanco, have basically shuttered mines until such times as the uranium prices bounce back to a more equitable level. Some of them are talking around a $60 a pound level for the uranium in order to bring those mines back online.
Any fear that Donald Trump's pro-coal program will harm the uranium people?
No, they believe that Donald Trump is also pro-nuclear power at the same time. So his philosophy, as it refers to resources, seems to be dig and drill and get as much as you can as quick as you can.
Was that the dominant conversation at the conference?
The dominant conversation at the conference was that we're finally seeing a light at the end of the tunnel. A lot of the resource prices have been on an incline for the past year, and it's getting to the point where people can start to work and turn a profit on their mines again, where with the depressed prices over the past 5 years, it was very hard to get much of a return out of the mines.
Do they have real optimism going forward?
Yeah, but it's cautious optimism. You have a group of individuals who have been beaten down pretty harshly for the past 5 years. So they're looking for any sign of optimism, but they've had a few false prophets, shall we say, over the last few years that turned out not to be realistic. And so although things look positive now, they're cautious in their approach in that it could turn pretty dark again pretty fast.
Have people been able to make gold production a lot more efficient? Because I remember a time when they said you had to make at least $1,100 an ounce on gold to make a mine work. Now, a lot of people tell me $800 gold would still do it.
In some cases, that's reality. It's funny when you have hard times, people figure out really quickly where they can save bucks and cut their costs in order to maintain profitability. And the past 5 years has allowed for that for the mining sector.
Have new innovations in the mining business also helped?
Yeah, they're all designed to cut costs, so definitely.
Is energy the main thing, or do you still have to look at your labor costs?
Labor's still the biggest element into it. But as we start to move towards more and more automation, that's going to help bring labor costs down further.
Yeah, those giant mining trucks you see, the 200-ton jobs, now they're being designed to be driven by robots, and those jobs pay $200,000 a year. You can see why somebody would want to trim that price.
Definitely, and you're seeing more and more automation with regards to, a lot of the technical work inside the mines themselves.
What about the people who actually go out and look for new minerals, the geologists? Any shortage there because the business has been so quiet lately?
No, there's certainly no shortage of geologists out there looking for work right now.
And because I know people were worried there might be a brain drain there because of retirement. Are there other areas where they might need new personnel?
Well, as things become more and more technical, they're going to need more and more people in the high-tech software industry that are focused on programs and software that help the geologists and people that are looking for ore track where, in fact, it is.
Was there anything at the conference you found surprising?
Not really. It was, the shifting of the attitude from last year to this year was the most surprising. Rick Rule once told me that he thought that when the recovery was going to happen in the resource sector, it was going to be a stealth recovery, meaning that it was going to go on for several months before the rest of the markets and the mainstream cottoned onto it. And from what I can tell, he seems to have been bang on about this. We've had a recovery been going since about last April, and it's been quietly working its way through the industry. The industry is aware of it. They're upbeat. Now the investors are starting to cotton onto this, that it's in fact there, and money's flowing back into the sector as far as investments go. As I say, they're able to gather enough money that they can do actual work instead of just keep the lights on.
What was your headline story coming out of the conference?
Mining's back.
And how big of an article is it?
It'll be a significant article in our next issue coming up in early part of May.
Where can people get the Prospector?
The Prospector is available online at theprospectornews.com. It's a free subscription, and all they need to do is go to the website where they get a highlight of the daily news, and then they can subscribe, and they'll get our weekly news wrap-up as well as our bi-monthly e-publication that comes out every second month.
Michael, thanks so much for being on This Week in Money.
It's a pleasure, Jim.
My guest has been Michael Fox, the publisher of the Prospector Resource Investment News, which you can find online at theprospectornews.com. And that wraps up our show for this week. We'd like to thank our guests Ross Clark, Bill Bonner, and Michael Fox, and thank you for listening. And stand by for a company showcase update with Larry Ray, the CEO and president of American Manganese. If you have any questions for This Week in Money, you can email us at info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm your host, Jim Goddard. We're speaking with Larry Ray, CEO and president of American Manganese. Larry, I understand you've just put out a news release on your research program. We're speaking March 8th. What can you tell us about the news for your shareholders?
Everything is good, Jim. The testing is going well. The final results, of course, are still a month away, but once those are out, we should have a very good grip on the cobalt and lithium recoveries, and this is going to be a big boon for the company. Certainly, we've put out 3 releases in the last little while. Every one of them very positive. We've done a MOU with Ames Labs, which is part of the DOE, and we've been invited to share our program, our recycling opportunity, with the members of the Cobalt Institute in May. That's recognition that we're on the right track, and although the stock did go down a bit today, it was kind of under pressure. Remembering listening to the interview that you had with Pat Powers last week, of course, that's a lot of that's manipulation and by predator traders, and we just have to get through that, and we will. Everything is going well. We've got other big presentations coming up, which once they're all firmed up, we'll be announcing. So it's updating the program. We've still got lots of cash in the treasury. We're not pushed to do anything at the moment. If the opportunity arises, we will do something on the financing side. And it's just another update for the shareholders, because there's a long dry period from the last time we announced results, and people begin to think, well, what are they doing? Are they sitting on bad news, or are they trading on good news? You just have to clear the decks every once in a while and let people know that everything's on the up and up, and that we're not expecting any negative negative results from our research program. Cometco is very dedicated to it. We're going to speed that program up. They have to hire more bodies, so we've got to coordinate that with them. But everything's on track, and our schedule is on track from our December 19th announcement. So it's I feel very good about the program, and let's just put it this way. Things can happen that could be negative, but, when the chemistry's right and everything else is right, the results speak for themselves. Now, another reason for getting this out is a lot of companies are talking about recycling out there now. Ever since we got on the scene, you're starting to see more and more of it. They pretty much some of them use the same jargon that we use. When I say that, we're talking about recycling and environmentally clean and recoveries and the cathode material, et cetera, et cetera, et cetera. But the one thing that they don't do, that we do, is they don't put out what their recoveries are, what they're doing. They just kind of go from 0 to 100 by skipping all that and talking about producing cathode materials. Well, after being in research several times, we certainly went through a long period with the patented process that we used for producing electrolytic manganese metals, which was electrolytic manganese metal and electrolytic manganese dioxide and chemical manganese dioxide. We went through a lot of hoops, and we got the patents on that. We spent millions of dollars doing that. The time was from 2008 to 2012. But the end result was that we had a patented process which is now patented in the U.S., China, and South Africa. And that's the basis, the whole root of our ongoing patent research. And we've now applied last year, actually, for the patents on all the different chemistries in the cathode material. So, everything is moving lockstep. I mean, the company was very fortunate that this patented process that we have had since 2012 works as a root, as a basis to spin off our recycling program. And that was recognized by Cometco, and we're moving ahead with it. And, I'm smiling going ahead, Jim.
Can you maybe explain what American Manganese has a patent on and why it's so important for investors to know about it? Maybe just tell us a bit about it.
Well, there's a lot of talk about Tesla, using manganese, electrolytic manganese dioxide in their battery storage. We've certainly got a lot of resources down in Artillery Peak that we can actually produce the EMD at a cost of, our initial cost for electrolytic manganese metal on that patent was about $1 a pound overall. The first 5 years was 90 cents a pound. And when you're producing electrolytic manganese dioxide, you can almost knock 40% off that because your power goes down to about 10 to 15% of the power required, which is a big component. And the reagent cost goes way down because electrolytic manganese dioxide or chemical manganese dioxide is 60% manganese and 40% oxygen. So as you can see, we're probably, with the current price of around 95 to $1 on electrolytic manganese dioxide, we currently should be well in the money if we were to move ahead in that regard. But we're going to stay focused on the recycling because there's a huge value in a concentrated form of the cathode materials, and especially cobalt, which is pretty much on the list of a commodity that's going to be spiking here in the near future. And I don't think people look at us as a cobalt supplier, but if they go to our December 19th press release, they'll see what the value is in a, say, roughly 1,000-pound battery when it comes to the various cathode materials, and they'll see, of course, that cobalt in every one of them is the most valuable component. So, and we know already, especially after this recent release, that we can get 100% of the cobalt. And that's a big, and that's in a form that could go right back to the battery manufacturer with high purity. So the initial patent, which is very crucial and important to this thing, is now, it looks like we're coming up on several fronts here on opportunities for the company. And, it's just, we've managed to keep the company intact over the last 5-year, call it a drought. It was more like, it was worse than a drought. But anyway, we kept it alive and kept it intact, and now we're starting to enjoy the benefits of that.
And jurisdictions around the world are doing things to encourage electric cars in BC. I think the government gives you a grant of $3,500 for a reasonably priced electric car. In the UK, they're changing the way cars are taxed when you buy them. If you buy a zero-emission vehicle April 1st and on, you don't pay any extra tax. But if you buy a vehicle that has a high carbon index, you pay up to $4,000 extra for your vehicle. So a lot of promise on the electric front, whether they're using the carrot or stick approach.
Well, that's certainly beneficial for us in the short term. But I see we're reaching a tipping point here where electric vehicles will be able to compete cost-wise with gas or diesel. And at that time, these grants won't really matter that much. They'll certainly still help. They'll induce people to move from, say, a B8 to a electric vehicle because of that grant. And but once people are in focus that these electric cars have a lot of power, they just don't make the noise that you have on the gas engines. I think the electric vehicle is reaching a point where it'll be competitive out in the world with automobiles. And when I mean automobiles, I'm talking about your regular stop-at-the-pump automobile. And we're seeing the gas prices go up again, which is another thing that's very good for the electric vehicle market, because the higher the gas price goes, the more prohibitive buying a gas automobile becomes. It becomes more costly. So, with storage and everything else, you should be able to balance out what's going to happen on the grid, and your electric vehicle is going to take top spot. It's just going to.
And you could get your power for free if you put solar panels on your house, had decent storage batteries, again, using some of your products' recycled stuff, and basically have the energy for your car for free after the initial cost.
Well, we always talk about, recycling electric vehicle batteries. That's because we get all of the cathode materials in one area. And it's going to be less work on the shredding and the preparation side of the cathode material to begin the metallurgical side, which we understand fully because we've been in the mining business, at least I have, for 53 years. And these other chemistries that are out there, and some of them will definitely work for us. All of your lithium-ion battery chemistries that have cobalt, nickel, and manganese in them, could, we're talking about laptops, cell phones. We could do those, but they're all different. They pose different problems. We want to stick with the one, but there's great opportunity in the storage battery area. And, that's an area that we haven't fully investigated yet, but we're taking baby steps, and certainly doing electric vehicles is going to be a huge, huge undertaking. You're talking about millions of cars, and over the years you're talking about millions of spent batteries. And you can just imagine how many recycling plants you're going to need. They're going to be in the thousands or tens of thousands around the world. So, and you also reduce the dependency on mined material. All this stuff is great for the environment. But at the end of the day, you have to make money. And, we're looking at the hydrometallurgical sides a slam dunk for us, cost-wise or anything else. But, the actual shredding and the preparation and that, once that's down pat and it's done mechanically, that will be a slam dunk too. But there's a lot of money to actually to be made in a recycling program.
Larry, where is American Manganese traded, and how can people contact the company?
American Manganese is traded on the TSX Venture Exchange under the symbol AMY, and on the U.S. exchange under the symbol AMYZF, and in Frankfurt under 2AM. Company can be researched at AmericanManganeseInc.com, which is our website, and we can be reached at 778-574-4444, or people can reach me directly at LREAUGH@AMYMN.com.
Larry, thank you very much for the update.
Well, you're welcome.
We are speaking March 8th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.